Embarking on the journey of investing can be both exciting and daunting for beginners. While the potential for financial growth is enticing, navigating the complex world of investments requires careful consideration and awareness of common pitfalls. In this article, we'll explore 10 common mistakes that beginner investors should avoid to set themselves up for success. One of the most critical mistakes beginners make is diving into investing without conducting thorough research. Before committing your money to any investment, take the time to educate yourself about different asset classes, investment strategies, and risk factors. Knowledge is power in the world of investing, so arm yourself with information to make informed decisions. Without a clear investment plan, beginners risk wandering aimlessly in the investing landscape. Determine your investment goals, time horizon, risk tolerance, and asset allocation strategy before making any investment decisions. Having a well-defined plan will help you stay focused and disciplined even during turbulent market conditions. Failing to diversify is a common mistake that can expose investors to unnecessary risk. Putting all your money into one investment or asset class leaves you vulnerable to market fluctuations. Spread your investments across a variety of assets, such as stocks, bonds, real estate, and commodities, to minimize risk and optimize returns. It's tempting for beginners to chase after hot investment trends or try to time the market, but this approach often leads to poor outcomes. Trying to predict short-term market movements or investing based on speculation is a risky game. Instead, focus on long-term investing principles, such as buying high-quality assets at reasonable prices and holding them for the long haul. Ignoring fees and expenses can significantly impact your investment returns over time. Be mindful of transaction fees, management fees, and other costs associated with investing. Look for low-cost investment options, such as index funds or exchange-traded funds, ETFs, to minimize expenses and maximize your investment returns. As you embark on your investment journey as a beginner, it's essential to avoid common pitfalls that can derail your progress. By conducting thorough research, creating a clear investment plan, diversifying your portfolio, avoiding chasing hot trends, and being mindful of fees and expenses, you can set yourself up for success in the world of investing. Remember, investing is a journey, not a sprint, so stay patient, stay disciplined, and stay focused on your long-term goals.